I'm Debi Peverill, and you're listening to the weekly tip from Penalties Financial Training Group. Today I'm talking about the difference between income tax penalties and income tax interest. This comes up this time of year because we're talking about personal income tax, and some people have filed their tax return late. You had until May 2nd this year to file your personal income tax return by midnight in order for it to be on time. And it was May 2nd because April 30th falls on a Saturday. And whenever April 30th falls on a weekend or a holiday, then it's extended to the next working day. So if you filed your return later than May 2nd and you owed money, you're going to be charged a late filing penalty. This penalty is calculated based on the amount that you owed. Once you have been charged a penalty, of course, they start charging you interest on that penalty. You can have filed your return on time and not, therefore you don't have a late filing penalty, but you still may have to pay interest because you haven't paid the bill. So short thing is, you get a penalty when you file something late. You have interest when you pay something late. So in order to avoid both penalties and interest, you not only have to file on time, you have to pay on time. And interest comes in a number of categories. You have arrears interest if money was due by May 2nd and you don't pay it until later. The longer it takes you to pay it, the more interest you will pay. And you also have installment interest if you didn't pay the installments you were asked to pay during the year. And of course, you have interest that's being charged on the penalty. So in order to avoid all of this, if you can't file something on time, you should at least try to pay on time. And if you can't pay on time, then you should make sure that you're filing on time. This is the only way to avoid these penalties, is to get your stuff filed on time and make your payments on time.